Hey everyone, hope you're well and thank you for joining me. My name's Ben and today I wanted to go over a few stories around some of the companies that I hold that might interest you. I'm then going to be following up with a portfolio update to see what's changed in regards to my portfolio over the last week. If you are new, please remember to like and subscribe as it really helps us out, and we're doing this every week. And without further ado, let's see what's gone on. So the first thing that I wanted to go over was some upcoming dividend dates over the next week or so. These are for stocks that I keep track of on my list. First up, on the 25th, we have Main Street Capital, British American Tobacco and Medtronic. On the 26th, we have DTE. On the 30th, we have WP Carry and Store Capital. And then rounding off the month, we have Cardinal Health. I thought I'd include this just in case anyone's looking to get into the positions either before or after the dividend. It's also nice to know that there is going to be a small price drop after this dividend is declared and on the ex-dividend dates just stated. So just in case anyone wanted to move into them, I thought I'd share that information. Now moving over to our first story, this one is actually around ABBVIE, who seem to potentially have been levied with a class action lawsuit. This is coming from the Pomerantz law firm, and they're looking into whether ABBVIE and some of the officers and directors potentially engaged in securities fraud or other unlawful business practices. They have stated that AbbVie issued a press release on the 17th of March announcing that the US Food and Drug Administration, also known as the FDA, had extended their review period for the supplemental new drug application. On this announcement, AbbVie's stock price fell by $5.80 per share, or around 5.23%, which then closed at $105. I'm not 100% sure on what the actual allegations are, and I have contacted this law firm direct. I will be keeping this bit updated, so make sure to subscribe so that you don't miss out on what's going on. And I've added the links below in case you want to do some further looking into it yourself. Moving over to our next story, this one's actually around BP, who seem to have aims to build the UK's largest hydrogen plant by 2030. This is another step BP are taking to move away from the more traditional oil business, fuel business aspects from what they do, and this plant is likely to be in the H2Teesside facility in the northeast of England. Overall, I think it's a good thing for them to be doing, to be moving to non-traditional methods of energy generation, as the oil business itself is slowly dwindling over time. So this would give them avenues for revenues in other sectors. BP are planning to cut their oil and gas production by around 40% and raise their annual low carbon spending to $5 billion with the final approval of this investment decision in 2024. And then that means that the production could begin by 2027. If this goes ahead, the facility could produce 1 gigawatt of hydrogen, which is essentially a fifth of the UK's government current target. So overall, that's a bit of good news for the environment, though a 10-year estimated completion plan probably isn't going to please Greta too much. If you do want to look into it a bit further, I have got the links down in the description below, which is just below the like button, which I'm sure you've already smashed. However, if that's not the case, let's take a couple of moments to do that now, and then we can move on to our next story, which is around Carnival Cruise Line, who on both the UK and US market are trading at their highest value since the COVID drop. Currently on the London Stock Exchange, Carnival is trading for around £17 a share, and on the New York Stock Exchange trading for around £20 a share. Carnival have also been upgraded to a buy rating at UBS, as a wider distribution of COVID-19 vaccines has caused analysts to raise their 2023 earnings per share forecast to $2.87. Which is up from the previous estimate of $1.55, and they've now lifted their price target to $42 per share rather than $20. For me, currently, I hold 4 shares of Carnival on the UK market that I picked up as part of a recovery play and the potential hope that they'd return their dividend by 2023-2024. Currently, I'm up around 49%, so around £22 across my 4 shares. And I have an average buying price of around £11. Did any of you buy any Carnival shares during the COVID drop? Are you long or short on Carnival Cruise Line, and what's your general thoughts? Let me know down in the comments below, and if you have been investing, how much you've made off of Carnival. And while you do that, I'll slowly move over to our next story, which seems that ExxonMobil are also being sued, this time by the School law firm, and it's another class action lawsuit. So for this one, the firm is levying charges around violations of the 10B and 20A sections of the Security Exchange Act. It seems that investors who purchased company securities between November the 6th, 2019 and the 14th of January 2021, inclusive of those dates, are encouraged to contact the firm before the 29th of March, though when I looked into this, it seems that they really only care if you've suffered losses in your investments of over $100,000. From my understanding, the case is around claims that the company allegedly made false and misleading statements to the market. Exxon allegedly forced its employees to use completely unrealistic assumptions about timelines for the company's well drilling activities in the Permian Basin. The unrealistic assumptions artificially inflated the value of the company's operations in the area. Based on these facts, the company's public statements were in fact false and materially misleading throughout the class period, and that when the market learned about these discrepancies, the Exxon price dropped, which has then caused investors to suffer damage. Now that wraps up the bits that I wanted to cover today, but as always, the links are in the description below, and please remember to like and subscribe. There are a few additional articles that I've linked down below, ranging from Realty Income's recent dividend increase and a look at their debts, through to even more incoming lawsuits. Let me know if there's anything you want to hear about or that you've heard about that I haven't included, and drop it down in the comments below. And now let's jump over to my portfolio update and see what's happened over the last week. Looking over to the general health of my portfolio, I have had a portfolio value increase from £2,454 up to £2,468, but overall I have seen a minute decrease in return from 9.94% down to 9.82%. which is around £1 in total loss, so nothing major there. At one point, my portfolio return did hit a total of 11%, with the 9.82% being the lowest for the week. So in total, a change of 1 to 2% across the week. And if we compare to the S&P 500 Vanguard ETF, we can see that overall my portfolio was protected from the greater drop, as the ETF dropped by around 0.22%. and my portfolio moved only 0.12%. Looking over to my purchases and my sales, on the 15th, I actually sold half of my position of ITV, as they were hovering around the 100% return mark, and this way I've managed to claim back my initial investment, so regardless of what happens going forward with the company, I haven't lost money on that investment. I can then decide in the future if I'm going to sell it if it is a higher percentage than it is now, or if they potentially start their dividend payment, I may just keep it for the dividend payments. But I used the funds from this sale to buy another share of Store Capital, who is a REIT, and I genuinely really like the company. They have a very strong set of financials and also strong leadership from what I can tell. Store Capital have had near on consistent growth in revenue, net income and free cash flow. This did take a slight hit at the start of the pandemic. However, it's still on a nice upward curve even since then. Over the last 5 years, the normalised change in revenue is 84%, the net income is 132%, and the free cash flow is 112%. They're currently paying a dividend of 36 cents with a payout ratio of about 81%, which is a little high, but I expect that to decrease over time as their sales revenues and net incomes goes up. And I expect this is partially artificially high due to the drop in revenue and income from the COVID period. This brings my total position in Store Capital to 4 shares, and with an ex-dividend date of the 30th of March, I'd be hoping to get around £1 from them, unless I manage to buy a few more shares in the meantime. Almost as if it was planned by me, that seems like a good way to lead into the actual dividends for last week. And it's been a relatively busy week, and starting on the 16th we had a 4p dividend from Amgen for holding 0.4 of a share. Then we had 19p from holding 0.3 of a share of Johnson & Johnson. Then 79p for a full Chevron share, and finally 53p for a full Exxon share. On the following day we have a 27p payment for 3M, as I was holding 0.3 of a share. We then had 29p for holding 1 full share of Walmart, and ending the day we had a minor 2p payment for holding 0.05 of Yum. We then had 3 payments on the 18th. The first one being the monthly 63p from Main Street Capital for holding the 5 shares. Then for holding 0.01 of a share of McDonald's, I got paid a full penny. And then rounding off the week is another monthly payer in the form of Realty Income, who paid 43 pence for the 3 shares that I hold. And then the very last payment of the week was another monthly payer, Stag Industrial, who paid out 29p for holding 4 shares. In total, that brings my weekly dividends up to a value of £3.49, which is around a quarter of my target for this month's dividends. I have checked and I do seem to be on target still for reaching that amount. However, it depends partially on any delays that Trading 212 have in the paying of the dividends. We also have the best returning stocks. For the first place this week, we currently have ITV, who is still first and sitting around 102% return. And in second place, we have ING with 91.98% and snapping very close at their heels with 91.58% is the newcomer on the top 3, Cineworld, who have seen a good amount of recovery over the last week or so and now seem to be one of my top 3 returning stocks. But now I have some important questions for you. First off, have you smashed the like button to help this video get out and let other people know that you can invest with small amounts of money? And second of all, how do you evaluate a stock? What metrics do you use and how do you go around picking the stocks that you want to invest in? I'm tempted to make a video around it, so if that's something you'd like to see, please do let me know in the comments below. And until next time, remember to invest, save and subscribe.